Okay, so it's, what is it, August 24th, 2020. This is the video log. It takes 30,000 to a million. And I'm sitting yet at another all-time high. It's crazy, I know. It just can't stop Apple. It's been a huge contributor to the account. I'll show you the account a little bit, and then I want to share with you some knowledge from my previous life, or still kind of current life. My expertise, which is in competition and sports and things like that, which was my day job. So, and some very, I think, timely lessons that I had learned a long time ago that may or may not apply right now. And we'll see how and if that will help you add some perspective to your trading. It's something I'm thinking about at least at this point in the markets. So here is the account. I'm sitting at an unbelievable 124,331. This daily chart looks like a beat, like a heartbeat. It's kind of cool. It says $891 up, but it's more like 1,500 because of the way option trades, move pre and after market, stuff like that. So, but let's look at the weekly chart. This is what the weekly chart looks like. Pretty impressive stuff here. Some weird drop here on this day, apparently, for the month. I don't know why Robinhood decides to calculate things this way, but this didn't actually happen here on May 25th. So I don't know what's going on. Sometimes it glitches out, but you know what? Robinhood isn't perfect, and I know many people hate Robinhood for this kind of stuff. It's not perfect, but E-Trade had a similar glitch not too long ago. I know at least a friend of mine that his account glitches out all the time, and it shows him at like negative, $900,000 or something like that, when his account is just doing fine at like, I don't know, 100, 200,000. So anyway, just a little bit off topic, but for the most part, cool stuff. And this is the all-time chart. If you haven't seen it, it's pretty ridiculous. This is what a successful knife catching episode looks like in December in 2018, whenever I caught the knife here successfully in the Christmas drop. And this is what happened afterwards. And then look at this. This is the unsuccessful knife drop when I entered in a little bit too early and caught the knife a little too late, so I got cut, but it's been a great heal afterwards. And now I'm going to do a quick review of the account and so I can show you the positions, and then I'll talk about what I want to talk about. So as always, you can see here the ticker. You can see the strike price, whether it's a put or a call, the expiration date, the number of contracts, whether it's a sell or a buy. And by looking at that, and this of course is the change in today's value, by looking at that, you should be able to gather all relative information that you want to know about these positions. So I'm just going to scroll down. A lot of unchanged stuff apparently, some pluses, some minuses. I'm really happy with the SPG option put sells here. And look at this, the option, the Apple option and Apple itself has just been going crazy. If you notice down here, I now have 70 shares of Apple rather than 75. There may be a little bit of buy the rumor, sell the fact kind of dynamic when it comes to the split, even though the split, as we all know, means nothing when it comes to the valuation of the company. And I'm also going to get 4 option contracts. What I'm thinking of maybe doing, by the way, is first of all, let me see if my mic level is okay. All right, it seems to be all right. What I'm thinking of doing actually is I'm thinking of selling call options against my long-term call options, against my leaps. So I might be collecting some premium because I'm going to be having so many things that I can do option plays off of now, right? So I'm going to have over 200 shares, so I can sell call options against my shares, and I'm going to have 4 leaps, 4 long-term option contracts that I can sell calls against short-term. So which could be a nice form of revenue. And considering where we are in the Apple price, even if it might go up, I think that it might be an opportunity to start selling some call options and lock in some of those gains. And I'm going to run through the rest of the account and segue that into what I want to talk about today. So here's Cameco, a little bit of gain. Norwegian cruise liners. I sold a lot of options today because they rolled over last week. ATCOs, Atlas, used to be C-SPAN Corporation. The UK market's doing just great. I sold, I got RDSA, which is Shell, because it dropped below 30. And now it's already up $90 today, which is fantastic, right? So now I can sell a call option, and guess what I did? I sold the call option right away. So kind of locking some of those gains. So it's at $31.50. So I still got room for $1 up in the price. So that's 100 extra bucks, 150, no, 100 extra bucks in a value that I could gain, plus the liability deletion of $80, which makes it a $180 play if Shell decides to end up over $30.50 by the expiration date of 9/25. And I think that's the account. That was the last position. Here we go. All-time record high. Can't make this stuff up. And here's what I want to talk about today, all right? This is something from my previous life. Maybe you can't see it very well. Let me see if I can... Oops, you're not supposed to see this. There's some private stuff over here. Let me see if I can fix that real quick. So, this is from my previous life. Well, actually, I don't know if I can fix that. I'll just go with this. All right. You can still see what's going on. For the most part, right? You can see the graph. So it says, first, let's look at the red line. Okay, so something I learned competing in tennis when I was in my early 20s, and I learned that this is true for any competitive endeavor. Okay, this is the confidence graph in red here. So whenever you first start an activity, you get this little kind of false confidence boost when things go right. Okay, they might not happen immediately. It starts up slow, but it's a very, very sharp boost. Okay, you could describe, what's his face? Well, I don't want to mention any names actually. So just like any beginner in any activity, okay, maybe you're playing pool and you happen to get some 8 balls in the pocket and you think you're like a really good pool player, or anything competitive really, especially with percentages. Or maybe you're playing blackjack and you get some lucky hits, and now you've won a bunch of money, and then you think like you're all that. Maybe it happens for some time, maybe you do it for a few months or whatever, but and your confidence could spike very high. But the underlying skill, your underlying performance and ability hasn't actually changed that much. And so what happens is you reach this point eventually when your confidence peaks, and then you suffer like a sharp downfall, right? You all of a sudden start losing blackjack hands. You all of a sudden start scratching the cue ball, or doing gutter balls in bowling, and you eventually start to realize that, hey, wait a minute, at first maybe you think that, oh, I just missed a couple, it's no big deal, I'm still really great at the sport. But then you meet better and better people, you play against better people, then you start, the house start taking you money in blackjack or whatever, or in poker, and then you all of a sudden start descending into this like, emotional kind of depression where you think you're just no good and you're never going to be any good at this specific activity. But if you persist, through the rock bottom, and eventually, as the years go by, and this bottom chart is measured in years, as the years go by, then you eventually will acquire enough skill and know-how to actually start getting some true confidence, true certainty about your skill and where you are placed relative to other human beings in a similar field. And so your confidence will start rising again. And up here towards the end, you reach the same confidence or higher that you once had, but this time you actually have the backing, you have the experience, and like what the hell you're doing. So, and I've overlaid this on what I call the fish graph in blue, which is the the two main progression types when it comes to somebody progressing through a field. You can take any field, right? You can take sport, blackjack, investing, bowling, right? Poker, any kind of activity that's competitive. It has to be competitive. And so in the short term, there's usually strategies that you can boost your performance. This is performance and ability, okay, the blue. Your performance and ability, and well, maybe not ability, but how about just performance? In the short term, there's things that you can boost your performance, right? So for example, if you're playing poker, you can just learn the percentages, right? Or just, well, that's a bad example, but you can just learn some plays that some really famous, successful poker players do, and just try to play by templates or whatever, and you just kind of learn like a little type of system. And then you may have experienced great short-term success. Or like if you play I don't know, pool, maybe the easiest way to actually hit the strike is just to roll the ball down the middle as accurately as possible, right? So maybe you adopt some kind of technique like that, and then you start getting some strikes, and you get a really big boost of short-term performance, and that's how it usually happens with most people. And then eventually, though, you kind of fizzle out, right? You tend to reach this cap whenever your technique is not right, and it's not tried and true, and it's not the best way to do things long term. And so with this kind of flat bowling technique, you're going to reach a certain level, but you're never really going to go past it. Okay, so the top line of the fish graph is going to start to kind of fizzle out, right? You're reaching a point of performance against your peers where you're no longer doing better than them. Okay, so over here, your performance against peers. And then on the bottom graph represents, the long and hard, true way of doing things right. Okay, it's where you're being taught by a veteran that's been in the field for a very, very long time, that's gone through these graphs multiple times, and that knows the ins and outs of the trade or the field. Maybe a bowler that's been bowling for like 70 years and has been professional bowler in their youth or something like that, or I don't know, some the real deal. And they show you the real method of how to do things. Maybe they're also an excellent teacher and you just got lucky, and they teach you the proper way of doing things, and now you take this hard road where you're underperforming. Maybe you're learning to spin the ball, right? I know that the bowlers, I don't know too much about bowling, but I know that they put a curvature on the ball, right? They put a spin on the ball, and maybe that takes a long time to learn. And so now you're spending all these years trying to learn to spin with success that you could have had by striking so much with just a flat ball, throw or toss or whatever the bowlers call it. And you don't experience much success in years, and then eventually start to master this technique. You start hitting more and more strikes, you're able to be more and more accurate, and you're being able to be more and more consistent. And so at this point, the bottom part of the graph, of the fish graph, actually starts surpassing the top, and you start exceeding the capped potential that you've placed upon yourself by initially starting off the wrong way, quote unquote. All right, so I've kind of interposed these two graphs together because I think it's a very good analogy of what might be happening right now in the markets, and what's probably going through a lot of traders and a lot of investors' minds. All right, I'm thinking back to this graph right now because things are getting a little bit out of hand in the market, right? So it's time to figure out, like, where am I on these graphs right now? Okay, so it's important to note, if your confidence is like peaking right here, okay, and you think you're the best trader ever, and I certainly don't, then you might be in trouble, right? You might be in looking straight down the barrel of this big depressionary cycle, especially if you're very emotionally attached to your gains. So what I would recommend if I was in that situation, if you're in that situation, is to really check your emotions and try to be like as neutral as possible in order to be able to think clearly about the situation. I like to be aware of all contrary points to my thesis, right? To what I think is going to happen, I search for things to be proven wrong. I actually go out. If somebody, like, for example, I have a very, non-standard controversial position when it comes to digital currencies and cryptocurrencies and Bitcoin and stuff like that. And uh, instead of me doing confirmation bias, which is watching anti-Bitcoin videos and why it's shit. Oh, excuse me. I don't swear too much, but I assume my audience is pretty mature. I looked at my statistics actually. It seems like the vast majority of you are over 18, so I'm not too worried. Plus YouTube anyway. Alright? Grow some hair. By the way, most of you are male. Like the vast majority. I think 98%. Interesting. Anyway, so what was I talking about here? I was talking about how I go out and actively search for material that would prove me wrong, right, on Bitcoin. Like I listen to all the pro arguments and all of the the what the smartest people in the field in this have to say about it, and I want to be convinced otherwise, right? I want to reach the next level of understanding. I like to use the dialectic method to try to gain better understanding of what I'm talking about. And so when I hear that information, I juxtapose it just like this graph kind of upon what I think and what my understanding of this is of the situation, and I try to see, which is better, what are the pros and cons, the holes in the argument. And so I then get to see the problem at a more educated perspective, right? And that's what I try to do with the markets as well. So where I think I am right now is I don't think I necessarily am good enough to experience these kinds of gains. And at the end of and I also don't want to turn my, I don't want to turn my head away from them either, right? So I don't want to be like, hey, I want to eliminate this chance of having this major wealth if this market continues to rocket higher. So I don't actually want to get out of it. My strategy is to be able to deal with the downturn. Okay, just like the confidence graph. Once you start going downwards, it's about being able to stay in the game and not quit, right? Being able to have the grit and the resilience to handle mentally and physically and materially the downturns of what the field or the market, bowling, whatever, poker has to throw at you, and whether or not you're able to go through the bottom and emerge up top again, right, to prosper yet another day. But I don't know how many people are thinking about that right now. It's been a pretty crazy market, and so I think it's a good point to kind of refresh the mental attitude that and show you how I'm taking it. I don't know how you're taking it. I don't know how other investors are taking it, but I'm trying to be really level-headed about this and just try to figure out, okay, how much, the risk reward of me taking gains right here versus me letting some things ride. Like, how many things do I need to sell call options against? Like, how likely is this to continue to ride up? How likely it is to crash? And I really need to get that right. Okay, I think it's very important because we need to worry. I mean, I need to worry about timing because it's a competition, right? If you're just riding with the market, you aren't really winning. Okay, the whole point is that you don't lose the money during the downturn. Okay, so everybody makes money on the upturn, but the whole point is to not end up like 2008 and everybody, who once had wealth had zero because they were either over levered or they were, having 500 mortgages they're trying to juggle with their, $50,000 per year paycheck. And they're flipping houses and all that, and they're into distressed properties now they can't get rid of or whatever. And so many people went bankrupt because of that stuff. And so it's possible that some of you lost a ton of money in March, right? It's possible. And I certainly did, but it's how we handle it. And I definitely trying to learn a little bit from my mistakes and how I started going too early. Actually was preparing for the March drop too early, and then I kind of ran out of patience and then whenever things actually drop, I ran out of patience again and got in too early. So I'm actually trying to work on my patience, and me sticking with my Apple call is an example of me trying to be more patient, but this time on the upside rather than on the downside and trying to catch a falling knife. Um, and I've been wanting to sell that Apple call for a very long time now, for like a month, but that means I'd be missing out on thousands of dollars. That position alone has gained me about $14,000 or something crazy like that. So I still would have been way up, like at 110,000, whereas I started about 90,000 before the March drop. But 124,000 is a lot more than 110,000. So anyway, I thought it'd be useful for you guys to kind of see where you are at, and see if you do see where you are in this graph, then you can kind of make better judgments and see if you can. It helps you live through and stay strong through these different phases, right? So when it comes to the red graph here, I would say, okay, we'll get ready for a rock bottom and see if you can maybe work on patience and just try to get better at investing or trading or whatever your craft is. And then when it comes to the blue graph here, I prefer the bottom side, okay, the long-term methods where, I studied economics and markets for a very, very long time. I'm not formally educated, but I'm self-educated, and I just, I read a lot of books and I listen to a lot of people, interviews, and read articles, anything that I could get my hands on when it comes to investing and trading. And unfortunately, I pursued this bottom line very late in my tennis career, so it led to some injuries because I don't want to get into it. But the top graph would be more akin to like short-term stuff, like getting into day trading right away without having proper training or experience, or just making swing trades that are really crazy, like buying Hertz, okay, just profiting off Hertz, things like that. That would be those short-term methods that give you great gain, but are detrimental in the long term. And by long term, I mean years, right? You could have a strategy, a day trading strategy that works for 2 months, 3 months, 2 years, or even 3 years, but eventually the market catches up with you. Any kind of inefficiency that you're able to come up with as a day trader, the market is going to have to fill. So if you're an experienced day trader, I believe that you're going to have to find a way to evolve yourself into the next stage and start exploiting different inefficiencies that start popping up, and not to stagnate with what's going on. And I don't think that's just true for day trading. I think it's true for investors like me, and the way I run my account. I have to be flexible with the current environments and what's going on. So personally, I'm trying to be on top of the news and how much money's been pumped into the economy. Like, what's the Fed buying right now, and how is that affecting the market? How does it historically affect the market? What am I likely to see, and what am I seeing? Juxtaposing those two things and constantly testing my opinion. So I just want to share some of the things that are on my mind and how I do things, and just let you in a little bit on my, inside of my mind and the way I think about running this account and my other accounts. And so I hope that helps. I don't know, it sounded like mumbo jumbo at some points during the video to me, but it's just, very quick, kind of what's on top of my mind type of video. So hopefully you all got something out of it. Hopefully you're also making more money than I am. I want to see all y'all rich. So anyway, I think I'm going to end it right there. All right, see you probably on Thursday. Peace out.